Thanks for clicking this secret surveyor video. On this channel, we know lots of people want to understand property better and to be better equipped to assess opportunities for themselves. Hopefully, by watching our videos, you will learn to do just that. So click the subscribe button and let's get on with the video. Welcome to today's property investment analysis. We will be exploring this retail investment. Is it a good purchase? The property is a retail premises let to Poundland Limited. It is a large ground floor store with upper floor storage areas. Let's dive into the positives. Firstly, this is a town centre location, which has its benefits in terms of accessibility and transport links, usually associated with central built-up areas. The property is on a main high street, which traditionally were solid investments. The bus station is a short walk to the northeast, and there are quite a few car parks available nearby. Further, we can see on the map there are very notable retailers nearby such as Boots, Superdrug, and NatWest. This is a good indication the building is in the right spot, as other retailers have chosen to locate nearby. It also gives some comfort to a would-be tenant that there will be visitors nearby they can entice into their shop. The building itself is quite prominent and hard to miss from the high street. There is a wide, clear frontage which the tenant can advertise through their branding signage, and there enough space for separate entry and exit doors. This is essential for some retailers as it meets their internal store flow requirements. The building is broadly a large rectangular shape, which provides clear open space and flexibility for the tenant to lay out the store as they wish. The property is let to a reputable tenant on a new 5-year lease. This is a big positive, as the tenant has recently committed to the location. It also means that unlike many other retail investments, it is rack rented, meaning the estimated market rent for reletting is the same as the rent the tenant is paying now. Your return is less likely to go down in the future when let on a sensible rent. Poundland are a well-established tenant, and therefore they will maintain the store in a fitting matter. As the lease is new, it is also possible the store fit-out is recent, which improves how the store presents to visitors and investors. It is not confirmed in the brochure, but it is probably safe to assume the tenant is responsible for the maintenance of the entire building, as it is let to just them. The next positive is the asset is freehold, and whilst you should always make legal investigations, you are acquiring the best type of legal interest. The store size is currently a slight drawback, given not many retailers need such large space. However, you could consider dividing the building into smaller lettings should Poundland leave at the end of their lease. From inspection on Google Maps, this property has a rear loading door at the south elevation, allowing the retailer to restock from deliveries away from the front of the store. This is a big positive, particularly for larger retailers. Now let's assess the risks. To start with, Nuneaton is not a desirable town. It has a relatively unaffluent population, and therefore it attracts shops such as discount retailers. This does mean it is an ideal location for the current tenant, Poundland. However, from the map provided, it can be noted that there is another Poundland store further down the street. The retailer will no doubt plan to close one store in the future, and it must be confirmed which one is to go. I suspect the subject property we are looking at will remain as the other store is in a less desirable location, and this property has a new lease. The next point in the building age and presentation. It is clear from the photos that the store is very dated, and no doubt the upper floors are subject to minimal maintenance. Retailers tend to only maintain the retail sales space to a good standard. Therefore, if the tenant ever leaves, you should factor in some refurbishment costs. Returning to the size of the property, it can be seen from Google Maps that the building is huge and runs right back to the return street behind. Whilst a positive for loading, it can mean the layout of the property runs very deep, and this is not very attractive for a lot of retailers. This issue here is customers do not travel very deep into a property when browsing, and the space near the rear will only have value as storage, if at all. I suspect this suits Poundland, who will near storage space, but may not suit some retailers who do not hold as much stock on site. For the same reason, this makes dividing the store into smaller shops in the future a more difficult enterprise. Why? Because by splitting the store, you are making very long, thin and narrow stores, compounding the previous point on customers no frequenting the back of stores. As there is likely good amounts of storage space on the ground floor, this makes the upper floors fairly useless. They are likely not fitted out, possibly not used at all, and therefore the tenant won't be applying any value to the upper floors when assessing what they are willing to pay for the space. Poundland are a large store requirement tenant. It is possible that those upper floors would be of no use to other tenants as well. Unfortunately, I also doubt the local residential market would support conversion to apartments. Thus, even if they have available separate access, there is little value to the first floor. In terms of leasing drawbacks, whilst it is good to have a new lease to Poundland, it is only a 5-year term, and so it is quite likely you will be dealing with the lease renewal during your ownership of the property. Negotiating with retail occupiers can be difficult. They are very cost-conscious, and the underlying retail market has been in the tenant's favour for many years. Rents often fall, and therefore your return is at risk. With that said, it is let on a new lease, and one would hope a sensible rent is somewhat more stable moving forward. The property is available for £1.2 million, reflecting a net initial yield of 7.08%. Whilst Poundland are a good tenant and the building suits their needs, I have concerns over the 5-year term and the overall size of the property for modern-day retailers. I would therefore be unlikely to get to this purchase price and would be applying a much higher yield to my bid. Thank you for joining us for this property investment analysis. Get in touch with suggestions for future videos, and links to the investment are in the description below. For more insights, don't forget to subscribe and hit the bell icon for notifications. This has been The Secret Surveyor, unlocking property investment secrets.